Good morning, everyone. Welcome to Admiral Markets webinar. My name is Chris. We're going to be taking a look at the live charts, technical analysis, of course, in this webinar. First of all, though, be aware that this recording, this webinar, and later on recording, I should say, is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country or residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this video and live webinar at this moment, you agree with this disclaimer and you are aware of the risk involved when trading. Great. So today our focus continues with price action and patterns. First of all, be aware of the calendar, though. There are always news events being released. So you want to check out when those are happening and what kind of impact that could have. There's a guideline here about the potential strength indicated by the colors, green, yellow, red being potentially the strongest. Today we have a mixture, as you can see, from mostly green but also some red ones. So be aware of those throughout the week. And let's head over to the charts. What other things you can do on the Admiral Markets website, of course, is take a look at the market heat map, market sentiment, take a look at the articles, take a look at the analysis, technical, wave, fundamental, platforms, all good stuff there. You can even look at the markets through WebTrader. For instance, we don't even have to necessarily open the MetaTrader 4 Supreme Edition or MetaTrader 4 itself. You can just go here, launch WebTrader. I can show you right away. Excuse me. And we'll have access very quickly. There we go. You can see in no time we are already there. So that's useful maybe if you are not behind your PC, etc. All right, but for me, from my perspective, I like using the MetaTrader 4 Supreme Edition a bit more. It's a bit easier. I'm used to it a bit more, so let's head over there. And let's take a look at the market. So for my opinion, we'll start with the euro dollar, then go down the majors. And we're seeing, in my opinion, an attempt to break this resistance trend line. And I think that price is succeeding. Last week, I was looking on Friday for this swing high, swing low to finish. Let me show you where I'm talking about from here to here. And for a retracement to occur down to one of these fibs, and then for a bounce to occur up to the -2 or -61.8 target. That has already partially occurred. So that indeed has happened. Price did retrace and did bounce, and price has moved higher, but it has not hit the target I have in mind. So that little bit of space to the upside, I think, is still possible for the euro dollar to move up. And this could be a trade that could happen this week, potentially. Let's talk about the parameters of that. First of all, in my view, ultimately I have this fib on, but that's part of a zigzag correction. I think this could be a corrective of this particular bearish swing high, swing low. So I will remove this fib and look for a zigzag pattern up to these fibs, because ultimately I think that price broke the structure here. This was a correction indicated by those red lines. Price broke through it, showed a good downtrend like this, and I think that this is a pullback for more downside. All right, so this is a retracement within a bearish trend. For that to be true, price should not break above this top. That's an invalidation level of the bearish downtrend. If price breaks above that, I'm back in neutral. There could be a bigger consolidation or correction occurring on the daily and weekly charts. As long as price stays below that top, below 108.28, I think that this is a pullback, a bullish pullback within a bearish breakout and a bearish trend. And I would expect price to stop in reverse or close in reverse or bounce at one of these fibs. Now, price has already reached the 38.2 fib. It reached that yesterday. It reached the 38.2 fib. It reached the R1 weekly pivot point and the long-term moving average, and the top of the Keltner. So there was a ton of confluence at that resistance spot. No wonder price bounced there. Something I discussed in yesterday's Admiral Market video as well. Not that surprising. There was a reaction to it. Price did move down about 50, 60 pips from it, and then bounce back up at the pivot point. So good to have those weekly pivot points on. Stopped at the R1, moved from the pivot point to the R1, then back to the pivot point, and now moving up again, right? That's what happened this week so far. So is there a chance that price could stay above that weekly pivot point and head up to the R2, which is at the 61.8 fib, at 107? Yes, I think that's at the moment the most likely. Could it extend up to the R3 and the 78.6 fib at 107.50? Yes, that could happen too. So there is some extension possible. Price could stop at any of these two fibs. I'm not sure which one. It could stop at both, ultimately turn at the 78.6 fib or turn at the 61.8. I'm open to both. I'll see what kind of price action candlestick patterns emerge and are visible at these particular fibs. And not only that, but how does price respond and react to these resistance levels? Because if price hits the R2 and 61.8 fib like this, then goes sideways and makes a bull flag, that could have been a great bearish candlestick pattern at the R2. But if it goes sideways like that, that candlestick pattern is not relevant anymore. I'll try to exit the short, the reversal trade, trying to get a swing trade potential there for more downside. Why? Because it looks like a continuation, and there is that potential for one more push up to the 78.6 fib. All right? So that's why I would get out of that one. If it hits the 78.6 fib, I would be even more inclined to go either with a pending order or again a candlestick pattern at the 78.6 fib. Stop loss could be above this top or above the candle high of that pattern. In this case, at the 61.8 fib, stop loss could be above the pattern as well, or above this top, but that's a bit wider stop loss. That's more for long-term traders probably. So if it makes a bull flag here, I would be more inclined not to close that trade because that could be a reversal pattern. It could still push one more time to the 88.6 fib, but it could just be the start of a downside. That could happen here too. In that case, I would wait for momentum, wait for a bear flag, and then try to rejoin the downside at a later point. So I know that there are a lot of scenarios we're looking at in one shot. So if you have any follow-up questions, please feel free to use the chat to ask those questions. But I'm just discussing what I want to see, what I need to see, how I react in various scenarios. So so that you have an idea not only about what I think about the market now, but how I probably will think about the market in future scenarios. So if price moves up and then down like this, then that would be a confirmation of a bounce at the 61.8 fib. And in that case, I can move it to break even and sitting pretty good on a short there with, I think, good potential for price to move lower. That's what I would like to see, either from the 61 or 78.6 fib. So we talked about the short, I think, enough now from the resistance spot. I think as far as I can see, I covered all the angles that I wanted to share for my trading. So the breakout scenario, let's talk a bit about how price can get up to that level, is that price could either hook back to the pivot point, make a hook back and bounce to the R1, then break above the R1 to go to the R2. Pause at the 50 fib, folks. Don't forget, it could pause there. It is still a 50 fib, and there is a top. I don't think, just because of the confluence perspective, I think it doesn't have a weekly pivot point there. So I don't think it will be the turning spot. But intraday, intra-week perspective, there could be a pause. There could be a bounce. Price could easily bounce 20, 30, 40 pips from that level before continuing higher. So something to reckon with as well, the 50 fib. But ultimately, I think if it breaks, bounces at the pivot point, breaks above the R1, that the R2 is the main goal, then the R3. Minor goals is the 50 fib. And I don't think it will be a major headache. I think price will eventually break through it. That's my best guess at this moment of the path path of least resistance. Now, I'll talk a bit more about this particular area as I zoom in. The breakout here between the R1 and R2, I think, is an intraday potential because the space is quite small. We're talking about 80 pips there. It's not a ton. I don't think as an intra-week idea it is too tight. I think the area there is not spacious enough. I think that is more of an intra-week, intraday potential there, maybe hourly 50-minute chart there to look for a continuation up to those fibs. Whereas these bounce spots are more swing trade ideas and could be longer term as well, because the idea is that these are resistance spots that could start a pretty substantial downside if this analysis about the bearish trend is correct and the price doesn't break this top. Alternative is that if price were to break below the pivot point, good 4-hour candle, close near the low, decent sized candle, 50, 60, 70 pips, 80 pips size-wise, close near the low, close below the pivot point. In that case, price would be breaking this correction. As you can see, price is in a channel at the moment, moving higher. That's a bullish channel on the hourly chart. We'll zoom into the hourly chart very soon. If it breaks through that channel, breaks through the pivot point, then I think there could be a test of 105. Price could go down, retest 105 round level, S1. If it breaks below S1, there's an intraday / intra-week potential down to the S2 and minus 272 target at 104. If it breaks S2 and the minus 272 target, I think there's a continuation down to the bottom and S3. And if it breaks the bottom, down to 102.50 parity, maybe even below parity. But that's a bit further down the road, so we don't have to talk about that now. But that could happen. That is a potential path how far price might travel. If it's really a bearish trend, that depends on how price will respond to this bottom, because although this is a good start of the trend, it's not a confirmation. For it to be a confirmation, price would need to break below this bottom. If it doesn't break below this bottom, all this could be is an ABC zigzag still. Price bounces off the target, off the bottom, and there could be an expansion of this huge correction, and your dollar could still go sideways. Who knows for how long? Maybe another month or two, or longer, until maybe the Fed raises the interest rate, for instance, right? That could be a trigger. Or fiscal policy from the U.S. president is introduced that could lead to inflation increase, for instance, right? Might also potentially be a trigger. So, and that could all lead to dollar strength, maybe later down the road. But for the moment, though, if price bounces off this bottom, then there's a likelihood of an extension of this correction rather than a continuation of the downtrend. And then the red ABC could happen rather than a 1, 2, 3. Wave 3 really has to have a lot of momentum. It has to break that bottom. Otherwise, it's not a 1, 2, 3. Whether it's a 1, 2, 3 or an ABC, I don't know at the moment. But what I do know is that in both scenarios, price should move lower and test this bottom and not break this top in both scenarios. So that's good news. That's confluence. That's wave analysis confluence, wave pattern confluence. So therefore, that's why I think that this particular scenarios that I laid out are likely, but you never know. That's why I do have an invalidation level at this top, because if it breaks above that, then both of these scenarios are invalidated. So, the major question is, how will price, from my point of view, how will price respond to 104, 103.50, and that is something that only the market will know and only the market will tell later on in time. So I think that's it on this 4-hour chart. Maybe a quick peek at the daily chart. Then we see a bullish candle, a bit of a wick though, but I'm not think so majorly concerned about that. Break of yesterday's low, and the pivot point could lead to that break to 105. Hourly chart. Before I talk about the hourly chart, Mario is asking about the effect of Trump. Honestly, I really don't know. That is a difficult question, and generally speaking, as we always warn, it is if you have news events, press conferences, unannounced statements, unannounced events, announced events. You want to keep an eye on it, and you need to make decisions on how you manage that risk, whether the trade is moved to break even or in plus territory, or the trade is removed before the event. And that is something that depends on your style of trading, the type of trades you take, your risk appetite, whether you trade the news or like to avoid the news. Depends on a lot of factors. But generally speaking, what the effect could be, I honestly is I would not even want to speculate about it. I wouldn't know. I I think that is going to be very difficult. I'm not a person that really follows fundamentals. Well, I wouldn't say this is a fundamental. This is a news event, but it could lead to some fundamentals, perhaps for the U.S. Right? So, but it's difficult to say. So, euro dollar, I think, is showing some bearishness at the moment. There are two scenarios. Price could, for instance, do like this. As I already explained, this is already a pretty good bearish momentum, but we also have bullish momentum here, and price could do like this. So I'm not sure if this is the pullback, a bearish or bullish pullback, a bearish or bullish retracement at the moment. I still think that this is more of a bearish retracement from our upside, as long as price stays above this pivot and in the channel. But at the moment, price action is bearish. At the moment, price is moving lower. So from my perspective, I think that it could be better if there's, for instance, a bullish candle engulfing twin like this on the hourly. I think it's much better than taking a trade right here as a pending order or a market order at this moment, because it's like catching a falling knife at the moment. Price is moving lower, and I'd rather wait for some confirmation about the reaction of price in this zone. It's a good channel, but price already bounced and is re-challenging a second time pretty recently. So I would rather wait for some bullish candlestick pattern at this. As long as it stays above the pivot point, any bullish candlestick pattern on the hourly 4-hour chart that stays above the pivot point, I think could be an indication of an upside towards, at the moment, towards the 50 fib, and perhaps already sit higher, most likely. If it doesn't bounce at the pivot point, but rather that keeps pushing bearishly like this, then I nicely avoided a losing trade, because in this case, if it does that, if price does break through the pivot point, my main analysis in a way is invalidated, because I do expect still a further upside. Partly it has already been validated, because I said that this swing high swing low is soon over and the price will retrace to a fib and bounce. That happened, but it didn't really get all the way to my target. That's why I expect a further upside. So if price were to fail right now, then partly that part, the second part, will be invalidated. But I didn't trade it. That's the cool thing about waiting for candlestick patterns, because in that case, my analysis was invalidated, but I didn't take a trade on it because price showed that my analysis is not triggered. In that case, I would probably look for a pullback up to the pivot point again, look for some pattern, and look for shorts in that case. All right. Let's take a look at the dollar yen. Dollar yen, basically, because pound dollar, to be honest, is pretty similar in its structure. Bearish momentum, looking for a bullish pullback for more downside. I think that is most likely. At this moment, though, price is pretty choppy, going sideways, moving around that moving average, and it looks like it completed a correction like this with a big triangle in the middle. And at the moment, I think that the bearish momentum is leading, is ahead, is dominating. Therefore, I think that this is a pullback. The pullback up to the 50 fib and the pivot point, weekly pivot point, could be the turning spot. But if price retests the bottom S1 and doesn't break it, there could be a move back to the top or even higher potentially to this 50 fib again, or even higher to these fibs, and a turnaround right there. If it does break the S1, there could be a bearish breakout potential. So this is a bounce or break spot. I still think there's a good chance of a bounce, but if it does break below the S1, there could be breakout, intraday breakout potential there to the downside. I think probably better to wait for still one more pullback. That's what I think is most likely. Dollar yen, in my opinion, bouncing off the 88.6 fib. I'm bullish. I remain bullish as long as price stays above this particular bottom. 111.59 is the invalidation level of the bullish potential for the dollar yen, in my opinion. That's where this entire swing high started. And if that bottom gets broken, then the bullish scenario has been invalidated. And I'll talk about what that means in just a second. Let's still focus on the bullish scenario. There are 5 waves here for me. This is one of the main arguments that I'm expecting a continuation of the upside. And the second one is a clear ABC zigzag, in my opinion. This is corrective structure, divergence between these bottoms, as you can see, and a clear ABC zigzag. So from my perspective, more upside is likely without breaking this bottom. Spoke about that in the weekly recap video yesterday too. Price was about here. I said this is, in my opinion, a good spot to take that 88.6 fib bounce, deep fib bounce, but that could happen with a wave 1-2, for instance, which seems most likely at this moment, which means that this could be the start of wave 3, which means that this could be a slow but sure start of a pretty impressive rally if price once again stays above this bottom. So from this perspective, I think there could be wave 1-2, wave 1-2. For this wave 1-2 to hold, to be valid, I need price to stay above this zero line here, this bottom, at 111.95. So price is 61.8. I think that could be a bouncing spot right now, with a stop loss below this bottom. I think is the evaluation level of this 1-2 on this time frame, not of the bigger 1-2 on the 4-hour chart. That's still at this bottom here at 111.60-ish, right? Although, in all honesty, if it breaks below this new bottom and it breaks below the 88.6 fib, then it doesn't seem as nice anymore. It seems a bit shaky, the 1-2 or AB. So this 1 hour, bottom could be already pretty good critical level, in fact, even for the 4 hour, but definitely for the 1 hour. 61.8 fib could be the bouncing spot, and if my analysis is correct, there could be a pretty good rally from here. So let's see. This is what I'm expecting. So for that to happen, it would really need to get to the minus 161.8 target at 114.25 at minimum if this is a wave 3 and the R2. All right, so another way, instead of taking the bounce, is to wait for bullish engulfing twins or so, bullish candlestick pattern on the hourly chart. Price could, or wait for a breakout above the pivot point, wait for a bull flag, and then wait for the break of the bull flag up to R2 and R1. Those would be alternatives. Or if price were to go deeper, then wait maybe for pending orders there or bullish engulfing twins there. So those are, in my view, the option at the moment, as long as price stays above this 111.95. If it breaks below that, then that's tough luck for myself, because in that case, what my analysis, my wave analysis is invalidated. Good. So I think that is it from the bullish perspective. Talk a bit about the bearish scenario in 2 seconds. For just one question here, could I share my fib tool? This is actually just a standard fib tool, but I will explain here what you can do. You can right-click on the ending, beginning, or the middle of the fib tool. Go to Fibo properties. Go to Fibo levels, and then add a level. Click on add, and then add, for instance, 0.236 in the level, 0.38, 0.382, 0.5, 0.618, 0.786, and I add, for instance, 0.272. Description, you can add anything you want, but if you want a price level, you need to add space % $sign to get the price level like I have here. and then click on OK. And then you'll have all these fibs. So that's a quick explanation. If you want to know all the fibs I have, you can either make a screenshot right now, uh, like this. You can make a screenshot right now, or just write me an email, and I can tell you those levels. Or you can go back to this video. It will be uploaded, and you can pause the video as well. Up to you. So the bearish scenario, if price fails here, obviously I have a bullish expectation because I think that this was a rally, this was a correction, and I think that it could be testing this bottom for a rally of that uptrend. The third reason why I'm bullish is basically on this daily chart. Big bullish momentum here. Price stopped and bounced at the 38.2 fib, which is typical for wave 4. If this is a wave 1, 2, and this is a 3, and this is a 4, then it's not surprising that the wave 4 is choppy and stopped at the 38.2 fib. It's not only stopped but bounced with 5 waves from the 38.2 fib. So yeah, there's a good chance that this is a wave 4 that stops at the 38 and then bounces like this for an internal wave 1, 2, and 3, 4, 5 to finish blue 5. But if that's not true, then price will break below this bottom, and then there's a chance that price will break out and retest the 50 fib at 109.99. Let's make it 110. I think I don't have the fib here correctly anyhow. 109.94, very close to 110, so I would just go with 110. And there could be a breakout down to that 50 fib at 110. And then there could be a bounce, again a bounce at the 50 fib. And that could be, perhaps, could be the bullish turning spot for more upside. If price breaks below the 50, then in that case, it can go down to the 61 or the 78.6 fib. But then I'm not as bullish anymore. Then I don't think that this particular wave is wave 4 anymore if it breaks below the 50. That doesn't seem as likely anymore. So that is, those are my thoughts if this analysis proves to be invalidated. Now Aussie, I think I'm not a particular fan of the Aussie. It is really extremely ranging at this moment. There was some structure still, even though it was ranging, there was some structure a while ago. But at this moment, it's becoming almost, really, really very, very choppy here already, and here for a significant period of time. And it's really stuck in between the tough spot because there's resistance, but there's strong bullish momentum and it's just not going anywhere. So it doesn't seem like it's interested in going up. It doesn't seem like it's interested in going down. And on all these time frames, we just see continuation of this consolidation. So I'm just going to flatly skip this one at the moment. I mean, I know that last week I was talking about a short in here and trying to catch this part, but then it retraced back up very choppily. Look at that. Doom, doom, doom. Like this, and then this, and then this. It's gone nowhere since there. So I'm not that interested in this particular Aussie. Wait, this is the wrong template. Hang on. All right, there we go. Kiwi is also quite iffy-ish. Not interested in this particular pair. Myself, maybe someone else sees something in it. That's fine. I think that I see double top. I see double bottom. Price about halfway, right on top of the weekly pivot point, and the moving averages are right on top of each other. So to me, it doesn't seem like it knows what direction it wants to go. It seems like it has no direction, actually. It seems like it's really directionless at the moment, especially when the moving averages on top of each other, the pivot point on top of the moving averages, price on top of the pivot point and the moving averages with a double top and double bottom on both sides. Oof. So one thing range traders would like is maybe look for a short at R1 or for a long at S1. And the reason why that could be interesting to keep an eye on, if there's one trade I would have to choose from this Aussie's New Zealand USD, the Kiwi, is that because when it's so rangy, when price will escape and move away from these moving averages, it will probably fail and then move back to the moving average. So bounce trades at the R1, S1 in this particular environment, probably the best thing to think of. I'm not a big fan of that, so I just probably would not trade the Kiwi. But if I had to choose, then this is what I would choose. Yeah, I can see why you're saying that, Craig. Indeed, it does seem a bit directionless in the last what is it since this point, February, in fact. Before that, there was a good momentum to the upside, of course. But I would have expected more of a bounce at resistance, considering the fact that there could be a retracement of this bullish momentum, but it hasn't happened yet. Interesting. Shows a bit of strength, in fact. The fact that it doesn't move away from this zone shows that there's not many sellers and not much selling pressure, which I would have expected, even as just a simple move back to the 50 fib. Yeah, I can imagine that you missed that because indeed the breakout was bearish. There was a pullback, continuation. This could have been just another pullback indeed. And that's okay. We can't catch everything. And I don't remember me catching, I'm not 100% sure, but I don't think I took, I'm not sure anymore, to be honest. But definitely at the beginning, because that would have been, I really don't remember. So it doesn't matter though. Anyhow, point is, it is a difficult one to catch. And I mean, these were very bullish candles. I remember saying that I was looking for a bearish pattern rather than a, obviously bearish bullish momentum. But it's a difficult one indeed. And this part is particularly choppy. All right, dollar CAD on Thursday. Anyone here joined the webinar on Thursday? I said that this particular bearish candle will probably mean that the 61.8 fib will not hold right here, because that candle shows strength. Therefore, support will probably not be strong enough to stop that candle, and we should see a break of the low. And indeed, price retraced a bit and made a lower low, actually made it down all the way to the 78.6 fib and the Keltner bottom. So anyone in the Thursday webinar looking at pivot points at that time knew about my view, and that's exactly what happened. Look at that. And let's take a look at this candle. The reason is the strength of that candle. When we're looking at price action and patterns, they give us information about who's going to win. Price, the speed of price, or support or resistance. If the speed is very high and very strong, then support or resistance will not stop it. It might stop it temporarily or shortly, but not for a reversal or stronger retracement. If the speed is low and there's divergence and it's choppy, that support or resistance will have more importance, and there's a higher chance that it could stop price from continuing in that direction. With a candle like that, particularly, there's a lower chance that the 61.8 fib will be strong enough in most cases to stop a candle like that. And indeed, a couple candles sideways and boom, break below the low and a strong bounce at the 78.6 fib, one lower fib. We talked about how I was talking about it, I think Thursday too, about how this could be a pullback. I'm not sure which webinar it was anymore. Yeah, it was Thursday webinar. I was saying that this is a break of the falling wedge. This could be a pullback from our upside. Although I didn't like the double top, so I was a bit hesitant on it because of that particular element. But price showing a pretty good bounce at 78.6 fib. Some wick here, that's important because if the close would have been near the low, it would have been the same as this candle. Some wick at least. More importantly, the bullish candle after that, I think, is the confirmation of a bounce. So any long in there is doing great as a continuation. Break, pull back, continuation. At this particular moment, I don't think there's anything to discuss. If price retraces part of that candle, it could still be a good retracement from our upside. And that's the only thing I see at the moment. Of course, it will depend on how price responds to the R2. There's R2 minus 272 and R3 minus 51.8 target there. So there could be some bearish reactions to those fibs and hence some retracement trades there to the downside. But that's more for reversal traders. With the trend traders, would need price to retrace part of yesterday's candle at least, halfway maybe, for instance. Alrighty, I haven't looked today at the crosses yet, so let's do that together. But I don't have anything prepared. I'll just talk about the charts as I walk through each of these time frames. And I think it could be good to have a fib here, perhaps 50 fib, as you can see. Bullish engulfing twins yesterday at the 50 fib. We can put a fib from here to here. You can see price hit the minus 61.8 target. Looks like a good bullish bounce there at a good confluence point. Pretty choppy downside. Divergence between these bottoms. Looks like price could make a rally because of that. Probably at least single divergence here. So there could be a zigzag. If the dollar yen makes that zigzag, I think the euro yen will do the same. Especially if the euro dollar bounces upwards today. That still remains to be seen, but if it does, and the dollar yen makes a bounce eventually as well, then the euro yen could make that zigzag that I'm thinking about at the moment. For the, this could be a bouncing spot right here. As I said, 50 fib, good reaction to the 50 fib too here, as you can see. So that could be an A or a 1. This could be a 2 or a B. 50 fib, 61.8 fib could be bouncing spots. Even these fibs. 4 is zigzag up to these targets. So from that perspective, got a couple of options. Taking the trade here, stop loss below the invalidation level at the bottom at 118.23. Waiting for engulfing twins here, putting the stop loss same spot or tighter. That has some risk though, of course. Waiting for price to get lower and then looking for a pending order or bullish engulfing some bullish candlestick pattern. Or alternatively, looking for a break of resistance trend line like this. Probably zoom into the 50-minute chart. Wait for price to show like this, make some pull flag probably, and then break. A smaller pull flag, that is. If on the hourly chart, the break of this particular correction would happen probably if there's a good hourly candle close above it. Pound yen, not a big fan of the pound yen at the moment, but probably still looking for a break above this daily resistance rather. Price broke below this support line, so it could be in a bearish breakout. That's something to be aware of. So it looks more bearish, but bit leery of the downside of the dollar yen. It will make a bounce up. So I would stay cautious on the pound yen myself. This euro odd made a bigger ABC zigzag. I was thinking about it because of the divergence between these bottoms that it could happen. Didn't act on this one. I was a bit hesitant on the euro myself, but that was an idea that was floating through my mind. But ultimately, skipped that one. I think more bullish correction is possible. Daily oscillator is moving a bit into a turnaround here. 4-hour chart is showing divergence, probably double divergence at the moment. So a move back up to the R1, I think, is at the long-term moving average is probably most likely. Alrighty, so we got a breakout potential. I would say if a candle closes above here, like this, to 138.90, or if price moves back to the pivot point, that could be another bouncing spot at the confluence with the trend line, like this. That's the structure I think I'm waiting for. Breakout to the upside or a bearish retracement down to the pivot point. Good support trend line here. Good channel to the upside. So this could follow the euro dollar as well if this bullish scenario plays out. Pound does not look interesting to me. Very choppy. Not a big fan of the euro pound. It does look like it's back at resistance. If another 3 candles fail at this spot, that could be a bounce area if they fail and do not break above this top. Next, this candle and next 2. New Zealand, I think, could make a bigger correction here. There's divergence between these tops. 5 waves completed so far, I see. So there could be an ABC correction down to the S1, the long-term moving average, and the Keltner. Could be a bounce at the 50 fib. If this particular candle, the one that's open right now, closes bearish and below the pivot point, I think that could indicate that a retracement up to the 50 fib is finished. And but let's see if that happens. If it doesn't happen, price might retrace a bit higher instead. Gold made that move up. Anyone who watched our gold webinar, I was talking about the bullish potential here for price to make a 5th wave. That neatly happened, so I was happy to see that. Oil is still in this rising wedge kind of formation. But it could still maybe push up to the target, but it has a long road to go. As long as it stays in this pattern, it could do that. It could keep riding this pattern. Sure, we can take a look at the CAD yen, and then I think we'll wrap it up for today. There we go. Let's start with 1 second, folks. I'm going to quickly save this. All right, so monthly charts. CAD yen, Canadian dollar versus Japanese yen. And pretty choppy, but back at support, it bounced. The higher time frames look a bit odd, but from a daily perspective, it looks the same, like or not totally the same, but it could be the same as roughly as the dollar yen. We don't have a wave 1-2 here because it broke the bottom, but we do have a choppy correction after momentum. If price breaks below this bottom, it could move down to the 38.2 fib and bounce there. At this moment, it seems to be making a triangle after strong momentum to the upside. Those are difficult to trade, generally speaking, but this one in particular seems even more difficult to me. But ultimately, it is close to a bouncing spot. It's still retesting that the bottom of the pattern. So there's a chance that it could use that bottom and bounce. There is divergence between these bottoms, which means that increases the chance of a bounce because there's double divergence on the hourly chart there. The S1 and the bottoms here, plus the trend line, could mean that there's a bounce trade. I'm not a big fan of bounce trades in ranges, but this seems the most likely at this moment. It's a bounce or break spot, that's for sure. If it breaks, there could be a breakout to the downside. I think a bounce is more likely because of the divergence. Candlestick patterns on the 4-hour chart, for instance, as there's a bullish candle at the S1, could lead to price challenging the pivot point, then up to R1, then potentially up to R2, and back to the top of that triangle. And that could be a bouncing spot, of course, again. Bounce or break spot. That seems the most likely. So I would be looking for a bullish bounce rather than a bearish breakout here. I think that has probably the most sense at this point. That will also happen a bit more likely if the dollar yen finally does make more distinct upside, which could be close. If today, this hour holds, that could be the engulfing twin I was talking about at that fib, the 61. All right, folks. Well, I hope that you check out the WebTrader, the MetaTrader 4 Supreme Edition. Lots of indicators, like this pivot point I'm just showing you, like the Keltner band I'm showing you. So there's a lot of stuff right there to view. Those are just a couple of examples of the MetaTrader 4 Supreme Edition, the extra features and tools that it has. You can find out more by going to admiralmarkets.com, clicking on this particular button. Here you see also WebTrader. And hope to see you in the upcoming webinars. Here are the webinars still of this week. Strategy tomorrow, last part of Fibonacci Waves. Then it takes a look at his live trading session. And on Thursday, we take a look at the psychology part, the trading psychology part. That's this week. Next week, of course, new lineup, new webinars on the times that that you used to, except Tuesday, Wednesday. They're moving a little forward in the day for March. Wish you great trading and talk to you soon. Cheers, folks.